Welcome, Legiti. Welcome to boot camp day, who knows what. Last day of our fair value gap section. I watched over the second video and it wasn't as bad as I thought it was. So we're going to leave that one there. And then honestly, this video, there isn't too much to cover besides kind of recapping what we talked about in the first two episodes. That's kind of what the third one is for, just a whole recap and then showing how we can put everything together with it. So I do think the second one was good enough, and we'll go a little bit more in detail today on how we can use fair value gaps. But hey, we know why we want to use fair value gaps. We know why they're beneficial in the market. We know why the market reacts off of them. And we also know how to spot them. Okay, so with that being said, today is pretty much just going to be a quick overview, okay, and then kind of putting it all together, how we can, actually use them to make money. And honestly, today's trade that we took was a perfect example of it. So let's jump right in, you guys. So to start off, okay, this is going to be a lot because we're starting to put things together now, and it's no longer, this is what a liquidity sweep is, this is what a trend is. It's like, okay, we have a trend, we have a liquidity sweep, we have a break of structure, we have a fair value gap. And now that you have these concepts, I'm going to move forward as if you guys fully understand these things, okay? So if you don't fully understand them, that's up to you to go back, rewatch the other videos I've made on them, rewatch the bootcamp videos that I made on them, rewatch the old videos that I made on these concepts, so you guys can be up to date. Remember, there's nothing bad about putting in extra work. Okay, so with that being said, here we go. Today was a prime time example of using a fair value gap. Okay, so as we can see here, right, we were in a small little uptrend on the S&P 500. We then proceed to break structure on the 15-minute, okay? And what do we get left with after this break of structure, right? We see a big imbalance within here. We see this fair value gap. Is there a fair value gap within here? No, because this wick overlaps with this one. Is there a fair value gap within here? No, because this wick overlaps with this one. This is the only fair value gap we saw. Okay? Scaling down, where is market open? And we'll talk about the value that market open gives us later once we've covered all the building blocks. But we have market open right here. Wait, why is this not right? Oh yeah, no, that was correct. We market open right here. Okay, so we saw that break of structure on the 15-minute, and then we see price start to rally back up into here. This is all during pre-market, okay? So we see a tap into there, a break of structure, it falls. But we're not even looking at this because we're fast asleep or at the gym waiting for market to open, okay? Because we're not going to take any trades that aren't off of market open. Okay, or aren't after market open. Okay, so we see price come into this imbalance, this 15-minute imbalance. We see a break of structure here, okay, rally back up. Break of structure here now, okay, we come down, make a lower low than this one, okay, so we can kind of like confirm that, okay, maybe we're trending down now. Okay, and then we see market open, and we see a push up into this, another imbalance within here. So what did I do? I scaled down onto the 1-minute time frame, and all I was waiting to do, because now we have two confirmations, right? We have high time frame, break of structure, trend shift, okay? Then, okay, we see the imbalance on the high time frame get filled. What do? Scale down to a lower time frame. Boom, we see a break of structure. Okay, now what are we doing? Scaling down to an even lower time frame, getting a prime time entry. Okay, we mark off that 5-minute imbalance. We see it gets pushed up into here, right as market opens. Okay, then we get a break of structure right here off of this candle close. Okay, boom, you can enter into short position off of that. I had targets at this liquidity down here, and then also at this little, I guess you could call it an order block, right? And both of those take profits ended up getting hit before the rest of our position got stopped out at break even. So hopefully with that explanation, we'll do a couple more, gives you insight on how to use these imbalances. Remember, we are not entering when these get hit right, we're not entering right when like price pushes up into here, because right, if we did that right here, we would have got stopped out, right? If we entered just off of, break of structure off of, this thing, we would have got stopped out. I really like to use these as like my patient entry. So essentially with imbalances, all I like to do with these, I use them for retracement. So let's say we get a liquidity sweep, a break of structure, and market dumps, right? And it doesn't give us a good risk to reward. So we want to wait for a better trade. How can we wait for a better trade? We wait for a retracement into a fair value gap, scale down to a lower time frame, and then find a break of structure off of that, because that's confirming that, okay, price is going to continue in the right direction. Make sense? Okay, let's do a couple more examples of seeing how these work. Okay, so right here on GJ, we have high time frame highs right up here, correct? Then what happens? We get a break of structure on the 15 minute. We get a sweep of liquidity, a break of structure on the 15 minute. We have multiple fair value gaps here. We have a fair value gap right here. And we also have one right up here. Again, mark out both, see how we want to find a reaction, okay? Scale down into a lower time frame, okay? We see the 5 minute, okay, break structure to the upside. That means, okay, cool. That means we're going to retrace on the 15 minute when we see break of structure on the 5 minute. That doesn't mean, oh, complete trend shift. That just means, all right, we'll probably be retracing on the 15 minute because the 15 minute broke structure. The 1 hour broke structure. We're showing bearish confirmation on higher time frames than the 5 minute. So this break of structure to the upside is telling me we are getting a retrace. We are retracing on the higher time frames. Okay, we see the first imbalance get filled. What happens after that? Boom, break of structure off the 5 minute. How would we enter off of that? Short position off of here, stop above these highs, right? Okay, where can we target? Previous areas of liquidity. We can target right here. We can target this accumulation within here, wherever we want, right? Liquidity all the way down here. And right, all of these end up getting hit, following this, right? There was a big imbalance and there was a big accumulation area down here on the 1 hour and the 4 hour, all the way down here. This would have been a great trade to take, all off of just boom, right? Literally 3 simple concepts that we've learned: liquidity sweep, break of structure, imbalance fill, break of structure. See how we can start grabbing pieces of our building blocks from a strategy, and we haven't even gone over these steps of our strategy yet. We haven't even gone over that yet. And we can already start taking these pieces and putting them together to form a bias, to form actual, understand where market wants to go. And we don't even have a strategy yet. We don't even have our executions down yet, right? This is valuable stuff. Okay, so boom, that's another example. Let's go into GBP USD. Oops. As you can see, I marked out a little imbalance within here that we just filled. I'm going to actually remove all these drawings though, so we can talk about it. Let's see if we can find a fair value gap getting filled. This is a perfect example. Okay, right here on the 4 hour, again, right, this is applicable to every single time frame. 4 hour, we get a break of structure. Okay, we see an imbalance right here. We also see an imbalance within here. Okay, what are we looking to do? We're looking to, right, scale down into a lower time frame. We know that we broke structure, so that means at least we're going to have some sort of, move down. Okay, we're looking for a retracement. Okay, we see price rally all the way up in through this, past it, right? The second we push past this, no longer considering it. Okay, I no longer want it. All right, it's not of interest to me. Okay, then what else do we have in line with this imbalance right here? We have liquidity lying right here. break of structure on the 4 hour along with the imbalance. This looks perfect. What does gold do? Spike up into that liquidity area. Spike up into the liquidity area. Boom. We get a break of structure on the 15 minute. That is kind of drastic all the way down here. Okay. Either you can short off of this break of structure right here. Okay. Target previous areas of liquidity down here. Maybe the accumulation that caused the rally up. That was from right here. Whatever you want to do. Maybe target the imbalance, the start of the imbalance right here, the 50% of the imbalance, the end of the imbalance right here. Whatever you want to do, this is just showing, right? We see the imbalance get filled. We see liquidity, again, 2 building blocks, liquidity getting taken out, imbalance getting filled, boom, market falls. Okay, you also could have scaled down to even smaller time frame, like the 5 minute. Yeah, you didn't even get a break until the same area on the 15-minute sub. Again, another example of this working. Let's find another example on a smaller time frame. Hopefully you guys are starting to piece this together, start to figure out, okay, this is how we can use this to our advantage. Okay, right here. Right, I'm literally just eyeballing this stuff, seeing whatever I see. Right here, we get a 1 hour break of structure to the upside. Let's look at the high time frame. Okay, we're bullish because we had that daily break of structure to the upside up here. Okay, we see price drag on down, fill into this accumulation that caused the rally up. All right, and we'll talk about accumulation and distribution later in this course as well. Okay, so we see a break of structure to the upside. Okay, we see price coming back down. Okay, if we go to the 4. If we go to the 4 hour, we can see, boom, we have this imbalance right within here. We see price, boom, break structure, fall back down within here. We also have 1 hour imbalance right in here. And honestly, this is the one that I would prioritize due to the fact that we can see, hey, this 1 hour wick fills all the way up to pretty much this wick. So this isn't even an imbalance. We're waiting for it to come down in here. What does price do? Come in here. What can we do? Scale down onto a lower time frame. Maybe 15 minutes since we're on the hourly. Okay, what are we waiting for? Trend shift, trend change. Okay, we do get a move here, break of structure right here. What would I ideally want? Probably for this liquidity to get taken out, right? Because as we start scaling lower and lower, we can see, okay, from here and up, that's not where the imbalance is because this wick filled the imbalance. Where's the imbalance from actually? Right here, from this wick to here, right? This is where the imbalance was. This is where we were not able to get filled. Okay, so we see here, boom, we get a break of structure, probably faking people out. And, right, if we scale down to the 1 hour, where was that? Whatever. Oh yeah, if we scale down to the 1 hour, this, boom, it's just 1 hour candle up. We didn't get very much confirmation on this. This looks like a sort of retrace on the hourly. However, we do see, boom, doji candle. Okay, what is that telling us? Okay, remember we talked about candlesticks on literally like our second day doing this. We talked about those doji candles, talking about indecision in the market. Right, we see indecision within here. Okay, we don't get a break of structure here. We don't get a break of structure here. We don't get a break of structure here. Boom, we finally get the break of structure right here on this candlestick, and that honestly looks like that's when the hourly broke structure as well. So that's 2 breaks of structure. Yep, broke structure, or actually broke structure. Broke structure with this candlestick, so I guess you would have gotten in a bit earlier. But still, same thing. We see break of structure. Okay, we see a rally on up. Okay, maybe our first take profit is up here. Maybe you get scared because price comes up a little bit, misses your first take profit, scares you, dips down one more time into this fair value gap, filling the imbalance once again. Price rips, takes out previous liquidity, and then in turn fills the imbalance that we had within here. As you can see, imbalance gets filled. What do we get? Small reaction. Then what happens? Imbalance right here. Boom. Gets filled, break structure, rally, higher. What happens next? We target this area of liquidity. See how fluid this moves. See how fluid this is. It is clockwork once you start understanding these concepts. I was literally able to flow through, fucking swimming through that chart, going over it. Obviously, it's easier to do in hindsight, which is why we got to practice, and which is why, we got to get experience in watching these happen live, okay? But you will be able to spot these things, and you will be able to actually take trades off of these once you start getting a feel for them, once you start getting used to see how these markets move. Okay, I literally just laid out like 5 to 6 trades that were fucking baby food, okay, for imbalance plays. And I don't even really like taking a lot of trades off of imbalances. To me, imbalances are mainly used for retracement tools to figure out where market wants to retrace to, and then from there I find other reasoning on why I want to get in. Whether it's an order block, whether it's a break of structure, whether it's a liquidity sweep within an imbalance, then a break of structure, I use it as more of a confirmation rather than an entry. Okay? So, with that being said, hopefully that gives you guys a solid understanding of fair value gaps. And the next concept we are going to move on towards is order blocks. Okay, we have liquidity sweeps, done. Break of structure, done. Fair value gaps, done. Now on to order blocks. We're going to do the same thing, part 1, part 2, and then part 3, putting it all together. Part 1, explaining it. Part 2, spotting it. And part 3, putting it all together, how we can use it as a trade. And amen. We are starting to get a lot of these pieces together. After order blocks, we'll go into equilibrium, and then from there, it's strategy time. And you're probably thinking, damn, man, we're like getting close to the end. No, we're not. No, we are not, because there's still a lot more to talk about. There's still a lot more to talk about than just strategy, and obviously that's why we're flip-flopping back and forth between psychology and this trading stuff. So hopefully, it's been 2 weeks now. Hopefully you guys have seen an improvement on your mental discipline. And if you haven't, and you haven't been following everything that we've been doing in the boot camp, if you haven't been doing your homework, maybe that's something you need to get on. Maybe that's something you need to start doing, okay, to start improving yourself. All right, with that being said, that's it for me. That's it for fair value gaps. I'll see you guys tomorrow. We'll talking more on psychology, talking more on discipline, and then the day after that, we'll get started with order blocks. All right, hopefully you guys learned something from this. I'll see you boys tomorrow.